Hello and welcome to ETAuto Startup Adda, a station for innovation, a weekly show that comes to you every Tuesday afternoon. And we bring to you startup founders, disruptors, investors, industry experts to understand what is the future entrepreneurship looks like, how will the mobility startup shape up in the future, which startups have the potential. We analyze them with the experts on three aspects: scalability, adaptability, and how does it make the business case in the current scenario and the future scenario of mobility space in India. Today's we have a very interesting startup. It has touched upon a subject, or you can say, an area always left out by the leaders or the prominent players in that space. That's the financing sector. In most of the automobile financiers or the people who finance automobile products have stayed away from electric vehicles, and especially electric vehicles in or any vehicles which is in the tier 2 and tier 3. This very startup is trying to provide easy financing to the people who are trying to buy electric vehicles in the tier 2 and tier 3 smaller towns and cities. That's the interesting aspect. They are trying to penetrate into a market which has been left or ignored by the giant in the finance space. Let me introduce today's power pack panel that we have. The founder and the CEO of Refin, Samir Agarwal. He is an IIT graduate. We also have the mentor and investor in Refin, Mr. Ranjit Yadav. He is a industry stalwart. He has worked with Tata Motors. He has worked with Hewlett Packard. He has worked with many other multinational companies. He is also investor in Refin. Thank you, Mr. Ranjit, for joining in. And as expert today, we have Mr. Arun Malhotra. We all know he is one of the veterans in automotive industry. He was the past managing director of Nissan Motor India. He worked with Mahindra and Mahindra for a long time. He worked with Maruti Suzuki, and he's one of the stalwarts, you can say, in the automotive industry. So these are the people who are going to discuss this finance space when it comes to electric vehicle. We have seen most of the companies, and finance of electric vehicles has remained one of the challenges because of the obvious reason, residual value and other constraint that electric vehicles throw up. So just want to understand, why did Samir choose this space? Why does Refin came into this space? Let's hear it from Samir. Thank you, Samir, for joining in. Over to you.
All right. Good afternoon, Nabil, and good afternoon to all your guests as well. Um, so Refin is essentially Nabil. I just want to check if you can see my screen now. Nabil,
Yes,
can
I
you hear
can
me?
see it.
Okay, perfect. All right.
Please go
So
ahead.
Refin basically is a digital lending platform, and our main area of focus, as you rightly said, Nabil, is electric vehicles. Why we chose electric vehicles and why we think this is a good space to be in, I'll be talking through in today's presentation. So let me actually first of all just start by talking about the EV segment itself, or the EV market, right? I think when we all think of electric vehicles, the first thought that comes to our mind is these high-end electric cars and high-end electric bikes. But the reality of the EV industry in India is quite different from that. In India, the sort of flag bearer of electric vehicles has been the uh, electric three-wheeler, or the low-speed electric three-wheeler, also known as e-rickshaw. There are over 2 million e-rickshaws on roads in India, primarily spread across the northern parts of the country, right? And these e-rickshaws have been selling in India for almost 10 years now, 8 9 years. And as I said, these vehicles are already quite well penetrated, well adopted in the country. And of course, now a lot of new vehicles are coming. Higher end vehicles are also coming into the market. They're yet to scale. But today I'm going to focus more on the electric three wheeler, which is a segment that has scaled. Now, from our perspective as a financer, again, Nabil, as you rightly said, most mainstream lenders stay away from this space. But I will tell you why we think that this space is actually a very good space to be in from a lending perspective. So the first reason for that is for the individual driver who buys these vehicles and who runs these vehicles, it's a huge income generator, right? It's a commercial vehicle. Anybody buying these vehicles are able to earn anywhere between 1,000 to 1,500 rupees a day. Even in small towns, we've experienced this in tier 3, tier 4 towns as well. So earning about 25, 30,000 rupees a month is about 2 to 3 times higher than what they could make in any other profession in those towns. So that's one big reason. The second is it is a vehicle finance. The vehicles are all registered, so there is asset security in place. The third is the social construct, and I think this is quite important as well, because there is a huge pride in ownership of vehicles in small towns in India, especially across UP, Bihar, right? And the people who buy these vehicles, not only, as I said, they earn 2 to 3 times higher than anybody else around them, but they are also seen as people who now own vehicles, right? So they become sort of local heroes, and a lot of people around them look up to them, and they also start moving towards buying EVs. And finally, the fourth big reason is the potential for scale. There's a huge potential for scaling over here. As I said, the market is already about 2 million vehicles, and this is, keeping in mind that there is not much financing available in this space. There is a lot of big parts of India that are not, which have not adopted these vehicles yet. So there is a huge potential to scale this segment, and there is obviously a huge need for these vehicles for last mile connectivity, especially in small towns. Right. So these are the reasons why we feel that this is a very good segment to be in. Having said that, there are obviously a lot of challenges with this segment. So let me talk about those challenges as well. Now, the biggest challenge that we face is that the customer is credit unworthy. What that means is that most of the customers that we get, in fact, 91% of the customers that we get are have no credit history. They've never taken a loan in the past. They don't have CIBIL scores. They have very low or no banking transactions. They don't have a basic or primary level of education as well, and they're not very digitally savvy, right? So even though they may have mobile phones, they are not avid users of digital technology. So that makes the customer quite credit unworthy and very difficult to underwrite them. The second is that the market itself is quite unstructured. There are almost 600 different OEMs in this space. There is not sufficient product standards, right? There is no sales certainty for dealers, for distribution network, and the policy as well. So far, I mean, now the policy is quite good in India, but so far there was a lot of volatility in the policy as well. The third is that the distribution is very fragmented. Now, a typical electric three-wheeler showroom is not like a car showroom, right? You go there and you find that it's probably a 50, 60 square feet shop with just two vehicles parked over there in one town. So the distribution is fragmented all over the towns, with each dealer selling very few. So it becomes economically unviable for financiers to set up a physical base to serve certain dealerships. And finally, Nabil, you pointed this out earlier as well, that there is no secondary market. There is an issue of residual value. I think this is a real problem. The value of the second-hand vehicle, once it's been repossessed, it's very difficult to assess, and that sort of remained one of the big challenges of this segment. Having said all of this, I think yes, there are challenges, but there are ways to overcome these challenges. And ultimately, a Niti Aayog report said that electric vehicle sales in India will be a $50 billion annual opportunity. So if that's the size of the scale, I think for startups like us, it makes sense to focus in the space and ensure that we can crack it, create solutions for all these challenges, and then start scaling. So from our perspective, how are we solving these problems? And we are basically doing two things. We are solving this problem, one, using technology, and the second is through ecosystem partnerships. Now, let me explain both of these. First, on technology, as I said, that most of these customers cannot be underwritten or very difficult to underwrite. So what does one do? Also, the distribution is fragmented, so you can't set up a physical shop everywhere. So therefore, the distribution needs to be far more cost effective as well. Right. So what we do is we've used a lot of technology to underwrite customers, and it's all delivered digitally. Being digital means that we don't have to set up physical shops everywhere, and therefore our solution is cost effective. And we've employed some very unique techniques to underwrite customers, which make it also very efficient in terms of approvals. So our platform basically does three core things. The first is biometrics. So we employ a lot of biometrics, which is done through our app, where we look at, we do face matching, voice matching, etc., for the purpose of identity verification and fraud detection. Then we do a psychometric assessment on users. This is basically to understand their personality traits, and these personality traits have a direct correlation with intention to repay. So in the absence of bank accounts transactions, in the absence of credit history, CIBIL score, etc., psychometric assessment is a very good replacement for those techniques. And third is we employ gamification to reduce delinquencies, to manage customers well, to ensure that they are repaying on time, they are repaying through digital channels by rewarding them for certain behaviors. Right. So this is how we sort of manage through technology. Uh, and what we find is that even though 91% of our customers do not have credit scores, we are still able to approve over 70% of people that apply to us. And despite doing that, we're able to keep our NPAs below 1%. Right. So that's a huge validation of how we underwrite our users. And finally, one last slide from me to talk about how we've built an ecosystem or partnership with various ecosystem players to basically scale this segment and to mitigate risks and reduce the cost to the end borrower. So what we've done is we've partnered with several financing companies. We have our own NBFC as well, but apart from that, we also partner with other NBFCs and financing companies in order to scale this segment. And what we've done is, how we do it is by creating partnerships with multiple OEMs of vehicles, with electric vehicle fleet aggregators or fleet operators, with e-commerce companies, insurance companies, um, guarantee companies, and telematics companies. Right. So we also embed vehicles with telematics. So that gives a very good idea of how much the vehicle is traveling. It helps reduce the cost of insurance as well, and of course helps mitigate credit risk from our perspective as well. Right. So what we've done is we've tied up all these different partners together into our platform to deliver a holistic one-stop solution to all our users, and that we believe will help us scale significantly and very quickly. Nabil, so that's our business model. Back to you.
This opens up a lot of ideas, and really throws up a lot of new thoughts around the financing ecosystem. You talked about people, those who do not have any credit history, and you are financing them. Up to 70% of them are being financed. And you also talked about how the unorganized sector you are targeting, like e-rickshaw. I think there's hardly any, mainstream financiers or big financiers look at these kind of vehicles, financing. Yet you are maintaining your NPAs less than 1%. That's really amazing to hear. I would like to bring in, the mentor, that your mentor and the investor, Mr. Ranjit Yadav, and understand how tough it was for you to get convinced, Ranjit ji, with the idea of Samir, when he talked about financing a sector on an unorganized e-rickshaws, or going to tier 2, tier 3 towns, where every aspect of financing, or the credit score or credit rating of an individual is very difficult. In metros, it's easy to find and maintain, CIBIL score or other credit history. But in small towns, it's very difficult. We see a lot of NPAs in these smaller towns, villages, and cities. Yet you got convinced. What was it?
So thanks, Nabil. Maybe I'll set a small context and talk about what you're asking. So, because of my background, I have particular interest in auto startups, and especially in the EV space and around, should we say, bottom of the pyramid. So that's why I found what Refin was doing very, very interesting. Yeah. spent a fair bit of time with Samir to understand and figure out how he has gone about solving, and his team has gone about solving this problem. Yeah, and think of it in another context. It's a genuine India problem which is being solved. It's bottom of the pyramid. It is people who are difficult to assess from a credit worthiness point of view. Yeah, and he is solving it through technology, because doing it the classical old-fashioned way is not cost effective at all, right? So I think that I found is pretty unique and outstanding. Yeah, and the ability to tie up the ecosystem together. So the proof of the pudding is Samir and his team have worked on this pretty hard for the last 2-3 years. And when he's talking about his credit approval process, his NPAs, he's actually, by the way, gone through 2 rounds of the pandemic, yeah, with and giving the reliefs which the government asked, yeah, and having the kind of performance which he's showing today, yeah. So I think it's extremely positive. To my mind, it proves the case that if you help a person, improve his economic earning capability, because by doing this kind of financing and tying it up effectively with a productive vehicle, this is not consumption expenditure. This is productive expenditure. A person can earn 2-3 times more. He can then reinvest in himself, his family. He can grow it, grow the whole ecosystem around him. So this is, I think, basically Indian human beings are very positive on this kind of thing. So that's why you see that people are willing to pay, and very grateful that they've got this kind of credit and they're able to improve their wherewithal. So I would say this is what has helped me, convince myself that Samir and the team is doing a great job. By the way, as we speak, he keeps getting more and more aggressive and scaling up. So I mean, those are the good things which I see.
Thank you, Ranjit. Samir, just want to understand a bit of business side of it. How much you have been able to expand your business? What's your plan going forward? How do you want to expand? Because the area right now is very limited to these, unorganized, mostly unorganized and smaller town and cities. When it comes to electrification, the larger penetration is going to be in the bigger city, and there also electric vehicle buyers are finding it difficult to get financiers, easy financer. Two-wheeler industry is picking up. We have seen electric two-wheeler is the big buzzword. You see the mega bucks being invested there. So that's a larger part of the pie. How do you want to go there?
Yeah, so I think so Nabil. First of all, I think we've just we're just coming out of the shadows of the two waves of the pandemic now, and the good thing is that there is already a huge momentum in the industry. We see, I think it's fair to say today that from an electric three-wheeler perspective, OEMs are not able to even deliver 50% of what is being demanded of them, right? Which means that the demand in the market, and all of them are at an all-time high production as well, right? So the demand is certainly 2 times, 3 times of what it has ever been, and we are experiencing the same thing, right? So last couple of months we've done more lending than we've done cumulatively in the last full year, right? And we think that we can, and we are now at disbursing at around 3 times of what we've ever disbursed previously, and we believe that we can be 5 times of, or we could be disbursing 5 times of this in
I
the
mean,
next.
before I get in and bring the experts for the day, can you give us some data or value in terms information, like how many customers you are serving, how much you have lended so far,
Sure.
and what has been the history? What is your scale up plan in numbers
Sure.
and actuals?
Okay, fair enough. So what we are doing at the moment is we are disbursing about 3 crore rupees a month. Um in terms of electric three-wheelers, that translates to about 300 electric three-wheelers, right? And this is by choice. Not There is a lot more demand in the market, but we are kind of expanding now. As I said, we are growing, but we are also choosing to be a bit cautious as we grow. We're choosing the partners we want to work with, the geographies we want to work in. Having said
What is
that,
the
I
ROI
expect,
right now? What is the rate of interest that you are offering?
so we offer loans at average 14%.
So that's almost double of the traditional auto loans or finance that is happening, that's about 7%, seven
I
and a
think
half percent maximum. So
I think I think that's a bit of an unfair comparison, because you're thinking more about the about private vehicles, but if you look at the commercial vehicle space, if you compare it to what maybe a CNG or a diesel auto is being financed at, it would be roughly the same, even by big banks, right? So it's roughly in the same region in terms of interest rates. Also, in terms of scale, as I said, the demand in the market is growing quite heavily. So we expect to be disbursing about 15 crore rupees a month in the next 6 months, and about 50 crores in the next 12 months. So that's the sort of traction, the momentum we are looking at. Also, I think you made an interesting point about EV adoption in cities. So I almost think of this as an existing and an emerging business. So electric three-wheelers driven through OEMs and dealerships in small towns is sort of the existing business, which is already running at some scale. And now there is this huge emerging opportunity, which is in the two-wheeler space as well as in the L5 three-wheeler space, which is the sort of more high capacity, more robust, high-speed three-wheeler. And both these are basically both these category of vehicles are going to find a lot of acceptance,
no,
especially
Samir,
in the
I completely agree with you that there is a market that is going to open up, demand is going to, but I just want to understand how long will the business survive when you have almost double ROI compared to the traditional automobile. Suddenly it is going to meet with the, like if you look at the falling price of batteries, the cost of acquisition of electric vehicle is also coming down. At and ROI is such at a high level. I just bring in the expert, Mr. Arun Malhotra, here and understand his analysis of the offering that Samir has right now. What kind of potential does he see, and how will he look at this business, and what are the questions that hitting his mind right now?
Thanks, Sabir, for a very interesting and insightful presentation. And I think also Ranjit gave a very good perspective that there's a large market at the bottom of the pyramid. My questions are two, three. If you look at, and which has been actually touched upon by Nabil even, if you look at three-wheeler financing, one of the challenges in three-wheeler financing, the rates have always gone up. And NBFCs have generally had a start-stop approach as far as three-wheeler financing is concerned. So you are clearly focusing on that how you are identifying the customer, their profile, and also their intent to purchase and pay. But one of the challenges in three-wheeler markets has been is not the intent part. The intent is there, but they are across cyclics which happen in the market, and because there are a lot of defaults. And lot of the NBFCs or the private financiers who focus on three-wheeler financing, they say the bigger problem is not financing. Their bigger problem is of collection. And they say the collection has to be in a shorter interval, because if you have a monthly collection system, then it has a challenge because these people are not able to save that much amount of time. Second thing I just wanted to understand from you is one of the challenges in three-wheeler financing has been that the down payment which a three-wheeler owner or a person who's getting into business is very low. And traditionally, the EV three-wheelers are priced slightly higher. So would you be financing, or would the down payment be lower, or it be the typical traditional, which is 30-35%? So these are two questions to begin with. I have one or two other questions and even some recommendations I'll share with you. So just wanted your perspective on this.
Sure, absolutely. So let me first answer the second question of down payments. Uh, one thing I think we've observed, and I think that makes sense as well, is that a customer tends to perform well when they have a good skin in the game, right? And I think that's why 25-30% down payments have been common in the market. Now, with EV, the good thing that is happening is that both the central and a lot of state governments are providing a lot of subsidies, because of which the cost of buying these vehicles is going down substantially. That's point one. And I think it's well established that the cost of running these vehicles is also much lower. So what happens is, if I think of it in terms of net take home for the borrower, in EVs is far more attractive because of the lower cost of operation, right? And that makes it easier to pay EMIs, and that kind of secures the deal a bit more. And also with all these subsidies now, with the cost coming down, even though 25-30% of down payment may be needed, but that amount that it translates to, it will be much lower than what it would be for a traditional three-wheeler. right? So I think
Okay.
that's how I see the market evolving. To answer your first question rather, on interest rates, right? So I think, I mean, ultimately, for me, interest rate is a factor of costs. Costs include how much, at what rate can we raise money from the market? What are the NPAs, right? And if NPAs, as I said, are in control at the moment because of our business model, and I expect that they will remain in control because of the value proposition that EVs bring to the drivers. And now, obviously, for us, raising money at the moment is challenging because other larger lenders, wholesale lenders, also take the same position that EV sector is a bit risky. So our cost of borrowing is also high. As we scale our book, I expect the cost of borrowing for us will also go down, and then we can pass that cost back to the consumer. It may not be very drastic, but it will be gradual. But hopefully, in the next 2-3 months, I don't see why EV financing should be any higher than financing for any other category of vehicles.
So
So I think
thanks. Yeah.
so. I think Samir, Arun's question was, how do you collect your money? Yeah.
Yeah. So
So
how do you
that,
collect? Because generally in this business, the collection, the person who's financing is very close to the market physically, and he has to visit number of times. So I said the intent is sometimes not the problem; it is the ability which is the problem. So technology will see the sourcing, or technology will see the selection, but how will we? The collection will take place.
Yeah. So I think from a collection perspective as well, technology is playing a huge role. Ultimately, if the driver can collect his fare directly into his electronic wallets or into his bank accounts, then he's more likely to pay through those modes as well. Right. So we are ensuring that all our customers basically get e-wallets. They have bank accounts in place. They have opportunity to go to payment bank points. Right. So we've given them multiple choices, multiple options to make repayments. Obviously, it's a bit of a challenge. It's easier said than done. It requires a lot of effort, a lot of training, a lot of interaction with the customer to make it happen. But I think again, gradually it is happening. It will take some time, but gradually that will also happen. So I don't actually see, because I feel that if the intention is there, and the customer is willing to make the effort, then basically we can find a solution. If they don't want to make an effort, then it becomes challenging.
I agree with you. I totally agree with you. Your intentions are very honorable, but still have a backup plan for collection. And I said, may
Absolutely.
not only arise, have a backup plan for collection.
Yeah,
Because
I think that
unless,
makes sense.
this country is full with stories. Citibank came in a big way. The first big company which came into, Ranjit is already smiling on this. They did very good financing across coal mines, across public sectors. And then they had to set up collection agencies. So just plan for it. So just
Absolutely.
that's my perspective. The second thing I wanted to ask is there are two segments in the three-wheeler, and they are both have different dynamics. One is the passenger segment, and one is the load segment. Is there any specific segment you want to focus on, or you are agnostic? You can take both of passenger and load segment.
Actually, we want to focus on both the segments, right? Because I think there's a clear value proposition for the driver in both the segments. I think there are some differences in the sense that the cargo uh, is more certain, right? Because you've got back-to-back agreements with e-commerce players, etc. But then there are also certain risks with that those contracts can end, and then therefore getting a new contract may not be as easy. Whereas passenger is sort of more of a day-to-day sort of a business, right? And that's very dependent on how the driver is and what his condition is, what his abilities, etc. So both come with its own set of challenges and opportunities, but we as a business will focus on both the segments.
I saw somewhere in your presentation the concept of aggregation of demand. Now you have ELSS has a subsidiary which is in the business of aggregating demand, and they're talking of very fancy big numbers.
Yeah.
So are you in touch with them? Are you collaborating with them? What's your status? Because they are talking of 2 lakhs, 3 lakhs, which is huge. And they
Yeah,
are,
so I think
yeah.
CSL intends to get 300,000 three-wheelers in the market. They've already got a tender out for 100,000. We are in touch with them. We are hoping that we can actually finance a big chunk of that 300,000 that they'll be bringing to the market.
And are you getting these? There are a number of government agencies which talk of financing to the bottom of the pyramid, but in reality, it doesn't take place. And that is the reason why the interest rates are, as Nabil mentioned, double the rate. There are a number of these scheduled banks, there are regional rural banks, there are societies. How are you using the government intent of financing at the bottom of the pyramid? If you can get that financing into your business model, it will be a great accelerator.
Yeah, I completely agree, and I think that's a bit of a challenge because we go to a lot of forums, we have a lot of discussions, and we talk about that the first thing that should happen is that EV financing should be classified as priority sector lending, which it is not at the moment. Right? Which if it does get classified as priority sector lending, then that gives us access to a lot more funding at a lower cost. Right? So I think that's one big change that I would appeal to the government to make. Right? And also, all these guys, the drivers, they're all micro entrepreneurs, so they should also be treated as MSMEs along with that. And I think if those two things happen, then access to finance will become very, very easy, especially for platforms like us. And then, therefore, we can be the front end and deliver loans at a much lower cost to customers.
So since you are in the business, I think it will make great sense for you. I mean, through your circles, your sources, Ranjit is there, who's very well connected at every level, so as to coax, motivate, push government that they use it as a priority lending thing, because that will be a big asset to you. Another point I just wanted, sorry, I'm asking too many questions. Stop me if you think the questions are over or irrelevant. And Ranjit, that's okay with you? Huh?
Oh, yes, absolutely. By the way, to one of your questions, Arun, my comment would be, I checked a lot whether they were able to collect money because that completes the business cycle for them. And I was very pleasantly surprised to see how effective they were at that. Yeah. And they have backstops with dealers, they have backstops with the
Yeah,
OEMs, etc.
absolutely.
as well. Yeah. So, yeah.
So, one question I had is, since you have got a business model and a technology platform which you're using for three-wheelers, wouldn't you like to also cover two-wheelers into it in the tier 3, 4 cities? Because there's no new thing to be done. Only the customer profile probably has to assess differently.
Yeah. So I think from our perspective, we want to do two-wheelers. We are doing two-wheelers. We are doing three-wheelers of all types. We'll also do four-wheelers, but we'll focus on commercial vehicles, not on personal vehicles, because I don't believe we add substantial value over there. With personal vehicles, either people self-funded or they have access to bank loans.
Samir,
One,
one question. Just sorry to intervene.
no,
I
please,
just
Nabil,
want
continue.
to understand, Samir, what is the average ticket size in terms of loan value, and what is the maximum tenure you are offering the loan for? These two
Yeah.
questions, if you could answer.
Yeah, so I think in the L3 category in the e-rickshaw space, the average loan amount is roughly 1 lakh rupees, and the loan goes up to 24 months. Average is about 18 to 20 months. For the L5 category, the loan goes up to 36 months, and the average would be about 2.25 lakh rupees.
So
Just
again,
one
I think
question.
this,
Yeah.
yeah, don't you think this is a very short duration for e-rickshaw drivers? They have to pay the EMI. Are they paying monthly or they are paying daily basis? Or do you
So
think their earning would be great enough because it's a very short span of time? Can you, because I see two hindrances here to in terms of realizing the real dream of going to the bottom of the pyramid. One is that the tenure is very short. I know that you have to secure your business also. Second, the ROI is very high. So going forward, are you trying to resolve these two issues to expand further to scale up? What's your thought on that?
yeah, so first of all, on the point of the loan duration itself, our average EMI on a loan is 6,500 rupees. All right, and a customer earns on average 25 to 30,000 rupees. So and my experience tells us that if the EMI is roughly 20 to 25% of the total earnings, then that works, then that's affordable for the driver, and that still leaves about 18 to 20,000 rupees of net income in the hands of the driver. Right? So for us, our loan duration, interest rate, or the loan pricing uh, eventually has to link with the driver's income, right? If we lose sight of that, then we'll have huge losses. If we make it too low, then they'll stop valuing it, and ultimately they'll stop repaying at some point. So it has to be substantial enough for them to feel that they have to save money for it, but it can't be so large that it doesn't leave money with them at the end of the month, right? So I think from that perspective, our EMIs are all right. The loan durations are okay. We collect monthly at the moment. Right, I think there are challenges obviously with collecting monthly. A lot of people say we should do it daily, weekly. Those models have been tried, not always successful. And I think the issue is that if we are able to get to a stage where every driver has an e-wallet, collecting money from that e-wallet every day is easy. But if you have to set up a physical collection footprint to collect money every day is extremely challenging. right? So I think there's a little bit, how should I say? I mean, hopefully we will be able to get to a stage where the collections are all 100% digital, and then we can start looking at higher frequency collections. But at the moment, we are at 1 month, and having said that, our collection efficiency is above 95%, even with this segment, right? So the drivers are responsible, right? So then they know that they need to save money.
So
So
I
I think
agree.
Samir, I'd just like to add, which I think you probably missed. So Nabil, for your reference, I think Samir said at the beginning, once he takes this loan, his income typically triples. So he starts earning 3 times what he's earning. So for him to pay 25% to pay off the EMI is something which is practical. And the second is his alternate for raising capital. The interest rates are from the local money lenders, which is significantly higher than what Refin is doing. Refin is trying to keep it as low as possible, and as they get scale, they will continue to lower it. So that's how they intend to work. Yeah.
Yeah, I agree, Ranjit, what you said. Your rates by three-wheeler standards are fairly reasonable. And if you can improve on it, it will only expand the market. The other thing is on
E-rickshaw, I'm
technology.
talking about e-rickshaw point of view, the earning
Yeah.
may not be beyond 20,000, because I lived in an area where many e-rickshaw were plying. I used to talk to them. Their earning were not beyond 20,000. It was very tough to anticipate earning going beyond 20,000 a month if they are driving it for 8 hours or 9 hours. If they are driving for 14, 15 hours a day, then probably it crosses 20,000, because people pay about 5 rupees per person for a 3 kilometer ride, 2 kilometer ride that is there. So, and they accommodate about 7, 8 people in one ride. So that's the kind of economics. I've seen it very closely. So that's why I was a bit, curious to understand. Thank you so much for your answer. Over to you, Arunji.
So just two questions. I won't take many. One is a lot of electric three-wheelers, which where generally figures are touted. They are one with where kits are imported from China, and they are with lead acid batteries. And the government's entire focus, whether it's through the FAME policy or the state government, is all the benefits should go to only vehicles which meet certain criteria and definitely are with lithium ion. And are you keeping that perspective in mind when you're financing? And lead acid battery vehicles generally don't have a bigger life. So there's no point going financing them beyond 18, 20 months. So is that perspective in your mind, or what's your insight into this?
So, so if I look at the market today, most of the market, 95% of the market, or even more than that, is lead acid based. Right, and that's because of a few reasons. One is the cost itself. The upfront cost of a lithium is higher, which means that if you've taken a loan, you have to continue paying higher amounts or installments every month. The second is that lithium batteries are still not very well established. A lot of drivers who buy lithium ion battery vehicles face a lot of issues with servicing, with replacement of batteries, etc. Right. But having said that, you're right. All the policies are focused towards lithium. Hopefully, the adoption of lithium will increase. Hopefully, the lithium technology itself will improve, and the warranties will all be honored by various OEMs. But that's not the reality at the moment. So I think from our perspective, I'm okay to finance lead acid batteries because that's adding value to the drivers. But equally, we keep working a lot with our OEMs to ensure that we constantly make a shift towards lithium ion. To give you some idea, prior to the pandemic, we were financing about 3% every month lithium ion batteries. Now 15 to 20% lithium ion batteries. So we've already seen an increase in lithium ion, and hopefully it will go to about 50-60% in the next 6-8 months.
My last question is, there's always a dilemma or it's option choice. Should you go after reaches that you cover the pan India, or should you focus? One of the things which I've seen, you might be knowing the name of the company, I don't want to mention it on, which is focusing on financing of used two-wheelers. And their learning has been, rather going pan India, a certain number of districts. They picked up some districts in Eastern UP, some in Bihar, some in MP. So focus in 50, 60 districts, and which is more geographically also covered, because you still have to make visits, power technology, and then do a lot of learnings and then increase pan India. So what's your strategy? I'm not suggesting the strategy you're saying, but that's one thing which I've heard. So I want to know from you're more learned, more focused, so you will be able to enlighten me. What is your approach in terms of
Yeah.
networks approach?
So, we are a startup and we know that we need to very quickly learn a lot of things about the market. So, our strategy is actually to do both the things, right? So, we keep experimenting with different geographies, different OEMs, different dealerships across the country, right? So, we have a fairly well spread out network. Having said that, we are also maintaining focus. So, we know what are the geographies that we want to expand in the next 3 months, next 6 months, and we are scaling up our presence in those geographies and ramping up our portfolio in those geographies. At the same time, we continue experimenting with new geographies, right? So 50, 60, 70% of our portfolio is concentrated in few geographies where we are scaling, and the rest 20, 30 is we are experimenting with new geographies, so that once we scale one geography, we are ready with the next one.
So Samir, frankly, I'm quite impressed the way you have focused. It's not a helicopter view. It's a think global but act local approach which you've done, and even the challenges which I've highlighted to you. Keep that in mind. But what I can see from your answers, these challenges are already in your mind because they already are pivoting with focus on this. The opportunities are large, but it's like a veto at the Security Council. One big vote in the Security Council of the 5 permanent members, I don't know who the members are, can cause a problem. So focus, the opportunities you maximize, but just have focus on these challenges much more sharply, which I'm sure you're doing. That's all on my side. Best of luck.
Thank you for that.
Thank you, Arunji. I would like to hear from Ranjitji more. But before I go there, I just thought of an idea. Do you have any top up finance option? Because after 2 years or 1.5 years, these e-rickshaws, their batteries don't work. They stop working. They need replacement. In such a scenario, are you going to offer them a top-up plan or something? Do you have something in mind for them?
Yeah. So Nabil, we have a product. We have a product which is called Rev Loan. It's basically a revolving loan facility that we give to our best paying customers. So a typical customer, if they've repaid properly for the first 6 9 months, they would get access to this facility. It goes up to 30,000 rupees, and basically they can use it whenever they like, either for battery replacements or for vehicle servicing or for any other purpose that they may have. They only pay when they're using the facility, and they can repay whenever they need to, right? So it's almost like a credit card with a limit that we give to the customer.
Okay, thank you, Samir. Ranjit ji, I just want to understand as a mentor or investor in the startups, what would be your message to the young entrepreneurs who are trying to get into this mobility space? What would be your message? What should be their pitch to the investor? How they can convince investor like you to come on board? What really
Okay.
excites you?
Okay, so that's a
So
big
he knows
ask.
where the money is. I mean, he's put his heart and soul into it. So he must have done his homework much better.
So when I look to invest in, one is what can a potential entrepreneur do. So that's one part, and the other is what interests me. So I think the good news is India is at a very, very good inflection point. Young people have opportunities today, which frankly Arun and I didn't have when we were young. Yeah, and I think preferred choice for a lot of young people is to become entrepreneurs. So the seeds, the background, the infra, the capabilities are there, and you see somebody like Samir making a good show of it. Is a lot of things coming together besides his personal interests and talent. So I would say this is a great time for young people to try and do new businesses and set up new models. If you look at auto, I would say 3 or 4 things one should look at. One is new technologies, new business models rather than old. So that's why, for example, I find EV very interesting, or financing of EV very interesting. In the future, there can be SaaS models, there can be subscription models. There's a whole bunch of things which will evolve. Auto has traditionally been a bit of a, should I say, traditional kind of business with very clear formats and structures. Those are changing very fast now. Yeah. And Arun can also talk about how those things are changing now. But as we can see in front of us those changes happening, and this gives a whole bunch of opportunities to new businesses, new entrepreneurs. The legacy businesses sometimes are not able to adapt that fast, or they need help in adapting. Yeah, so I would say there's a whole set of things that entrepreneurs can look at. The key is, finding the right product market fit and making sure that you're doing the right thing for the consumer. If you get this piece right and you build enough domain knowledge, these three things, if you get right, then the rest falls in place. So when I personally look to invest in a startup, I look at three, four things. I look at actually the entrepreneur first, the passion and domain knowledge, the persistence the person has, and then ideas will morph and they will come together in different structures. But do they have something which works in a beta at least and then can grow? Yeah. So, and Arun, back to your point, which you asked or you commented, very often it's great to show it works in one place or in one territory and then be able to scale it up. Yeah. That's another thing I look for. And finally, I look at the team. I mean, eventually one person does not make a business. You need a team, whether it's a small team or a large team. So, yeah. And the final thing I would say is, has the entrepreneur gone through some adversity? It's all good when things are going well, right? I mean, how do you handle the knocks on the knees? Yeah.
So from there, I'll just go back to Samir and understand what are the worst experiences or toughest crises that you have faced in your entrepreneurial journey so far, and how did you overcome that? Or even now, what are the big challenges that you see?
So okay, I think when you're running a company, when you're running a business, there are ups and downs every day. A lot of new challenges keep coming up. I think in terms of what has been our worst experience so far as an organization, obviously, I would say the first 2 or 3 months of the pandemic last year was the worst time for us because we had just about set up our business, everything was running very well, and then suddenly to reach a point where there were no sales and no collections happening was extremely challenging personally for me and also for the organization. I think, but it was a short-lived sort of adversity or a roadblock. I think broadly, if we speak, I think two things worry me the most. One is the ability to raise sufficient money at a sufficiently low cost. Right, I think that's a challenge that we face. We've always faced because of lending in EV. So we are almost, seen as these people that nobody wants to lend to, right? So that's one. And the second is collections, right? So collections always has to be right, and collections is ever evolving. It keeps changing. The nature of collection keeps changing. The requirements keep changing. The way we collect keep changing over, every few months. So that's another thing that kind of worries me. So I think those two things: having money in the bank to lend and being able to collect that money back. I think that's it.
Samir, where is your rightful place 10 years down the line? Where do you see yourself?
um, well, I don't know where we would be 10 years down the line, but I think my expectation would be, look, I come from a banking background, right? So I've been a professional banker for almost 15 years. And, I've worked for a bank that was spread across 100 countries with 55 million customers, 250,000 employees, right? So I always think that I want to build an organization like that. Right. So ultimately, I'm hoping that we'll be able to create an organization that will operate at that kind of scale, be present in several countries, and become one of the largest platforms, digital platforms that is working towards lending to people who are at the bottom of the pyramid. So that's what I expect.
How do you see, are you looking at raising more funds? What's your valuation strategy? We see a lot of startups trying to build valuation, and once, how are you going to sustain your service quality, or what's your idea? We have seen many, startup end up burning cash, or they lose after scaling up certain volume they reach. They lose the customer connect. They lose the service aspect of it. We have seen many big startups faltering after some scale they have achieved. What's your thought? How are you trying to build that status that you will remain stable even after that? And what's your scalability strategy in terms of raising the funds, also increasing your valuation also?
Yeah. So I think first of all, are we looking to raise money all the time? After all, money is raw material for us, right? Because we are in the lending business, so we're always looking to raise money. I think from a valuation perspective, it's good to have a high valuation because that means you can raise more money. I think for me as a startup, high valuation means you can raise more money without diluting too much, which means that you can also raise more money in future if you don't dilute too much at this point in time, right? So that's how I see valuations. I think ultimately. Um, Also, I come from a risk management background, so I would like to believe, or I take great pride in the fact that we are a very stable company. We don't make huge losses. We focus a lot on profitability. We've always focused on profitability, right? So we make sure that every loan that we do is profitable for us, and we make sure that we have built in sufficient amount of risk mitigants in our business model, in our cash flow, etc., to ensure we can pass through any adversity. I'm very proud to say that during the pandemic last year, this year, we've not cut any cost, we've not fired anybody. We've honored all salary increases, we've honored all bonus commitments, so on and so forth. So as an organization, we're always sort of well padded and well prepared against adversities, and obviously with scale as well. And what we've seen is, even with as we are scaling up, obviously there are a lot of challenges, but we are still able to maintain the quality of the book as well. We are able to maintain our margins as well with scaling book as well, right? So I think. In that sense, we're not a typical startup that's burning too much money. Our marketing cost is nearly zero. Our customer acquisition cost is actually zero, right? So a lot of focus on ensuring good margins.
One question I had, which I wanted to ask, is who's your competitor? Who do you see as a number one competitor, or you see no competition, or you see only opportunity as a competition?
No, there is competition. I think we have competition from several sources, right? So there are certain NBFCs that are focused in this space. There are certain banks who are also lending in this space. The good thing is none of them are focused in this space, so they are doing it as a side business. That means that there is no direct competition who's only focused or going head with us in this space. And the good thing is that from a digital perspective, we are the only sort of real players in the market today. Of course, there is emerging competition now, right? But we are a few years ahead of them, and that kind of means that not only in terms of scale, but also in terms of insight, we are ahead of them. So there's no direct head-to-head competition, but a lot of competitors in this space.
So, do you have any aspirations to be in the mainstream as one of the mainstream financer also, or you will continue to work in this side of the business only?
Well, I would like to think that EV will become mainstream in the next 2 years, right? So,
No, EV, two-wheeler, cars, personal vehicles also. Do you look at that space also?
personal vehicles, I think first of all, as I said, I'm not sure we add too much value over there as an organization today. And second is on the EV front, personal vehicles will take some time. So
That's right.
I'm not ready to answer that question right now. Maybe 2-3 years down the line, we'll reassess.
Thank you, Samir. Thank you, Ranjit ji. Thank you, Arun ji, for joining ETAuto, a startup a station for innovation. We'll be back with another founder, expert, and innovator Tuesday, 3 p.m. See you there. Thank you so much once again for joining ETAuto.
Thank you. Thank you.
Very much.
Thanks, Nabil. Thanks, Arun.
Thanks,
Always a pleasure.
Ranjit. Thanks, Samir.
Thanks.
Thank you.